Hello everybody, and once again welcome to Sinhanomics, the money machine. Thank you all for the great response for the previous video that was the future of the chip war. And as promised in that, I am back here with Intel. Yes, I'm going to analyze Intel for you. Let's start looking at the industry overall, the industry landscape. So Q1 2023 market share of x86 CPU was recently announced, and AMD is leading the pack. Actually, AMD is now at 35% market share of x86 CPU chip, which is almost 8 percentage point increase from last year. Obviously, Intel lost it. Intel's market share right now is 65%, down from 72% last year. Not only that, there are some other shockers for Intel. Tesla recently announced that for their Model Y infotainment system, they are switching from Intel to AMD. And we all know that Elon Musk already had announced in 2017 December that Tesla is going to manufacture their own self-driving AI chips, which they are doing it anyway. So Intel is losing from those fronts as well. Now, the third thing which I had covered in details in the previous video, that Intel is investing heavily in the foundry, yes, in making the chips. So they have pumped around $100 billion in an Ohio complex to make it a mega semiconductor complex. They're also investing heavily in Poland. They're going to set up a fab facility in Germany, and they're investing $25 billion in Israel for another fab facility. So Intel has been heavily investing in the fab facilities, in chip manufacturing. In my personal opinion, this will have a little bit of impact on their gross margin, guys. Yes. To manufacture a 12 nanometer semiconductor in Taiwan, it costs $1,500, whereas to manufacture the same thing in USA, it actually costs $2,500. Yes, 75% higher cost. So what does this mean? As Intel is driving more and more manufacturing in USA, it will dilute the gross margin. Well, a lot of analysts and a lot of investors like me and you have been comparing Intel with NVIDIA. They're saying, hey, Intel is still a $63 billion revenue as announced last full financial year versus its market cap as compared to 1 trillion market cap of NVIDIA, and which is again like $30-40 billion revenue. But hey, my understanding is that comparing Intel with NVIDIA is comparing apple to oranges. Yes, you heard that right. One is in the CPU market, which is drastically and rapidly getting replaced with GPU. Another one is in the leading seat of the GPU market. And as I talked about the cost, let's compare the cost, guys. The cost of creating or manufacturing one GPU is quite huge. Even from the primary data center, workhorse they call it for NVIDIA, one GPU costs $10,000. And GPT-3, which is actually a GPU to train the large language models, guess what? How much it costs? It costs $4 million. Yes, comparing NVIDIA to Intel is apple to oranges comparison. Of course, NVIDIA's price may be overpriced. That's a totally different discussion. But from the company perspective, from the future perspective of CPU versus GPU, it's a totally different and irrelevant comparison. Now, let's look at the financials. Intel just announced Q1 2023 quarterly earnings. The revenue was $11.7 billion, which was down 36%. Yes, you heard that right. It's down 36%. Gross margin was 38%, down 15%. And earning per share was negative 4 cents. Yes, it actually recorded a loss of 4 cents, which was down 105% year over year. If you look at the different business segments, client computing, the revenue was down 38% and the operating income was down 81%. Data center and AI, revenue was down 39% and the operating income was down 137%. Network and edge, the revenue was down 30% and operating income was down a whopping 172%. Intel Foundry, revenue was down 26% and the operating income, well, they reported a loss even last year. It actually increased, the loss increased from 23 million to 140 million for Intel Foundry. And the last segment, which was Mobileye, it's a small company that Intel acquired in 2017. This company is actually involved, Mobileye is involved in system development, chip and software development for self-driving cars and cameras. Their revenue was around $500 million, but that was slightly up 16%. But again, the operating income was down 17%. So Mobileye was the only segment that has shown some growth in the revenue. Having said that, that only forms 3 to 4% of the total Intel business. They've also given the forecast or the guide for Q2 2023. The revenues will be around pretty much the same, $11.5 to $12.5 billion, but that's down 22% year over year. Gross margin will be pretty much 37%, down 7%. And earning per share will again be 4 cents loss. And that will be down 115% as compared to last year. Well, with all these things, there is another shocker for Intel, guys. Intel used to be a high dividend paying stock. The dividend yield of Intel used to be 4.4%. Recently, they have just announced they're going to slash it down by 66%. Yes, you heard that right. 66%. So, just to complete the story, for the last complete financial year, they reported a revenue of $63 billion, which was down 12 to 14%. Gross margin was pretty much at 47-48%. That was down around 6-7%. And earning per share was $1.84. That was down 65%. So we are seeing a continuously downward trajectory. If you look at the stock price for that matter, in the last 5 years, the stock has given a negative 35% return overall. The last 1 year, it has given roughly negative 16% return. This year, it has actually increased. That is because of the chip boom. So now, let me know which side of the fence are you? Do you think that Intel is a great buy? It's a value buy? And you believe in the turnaround story of Intel? Intel is still the market leader, still the gorilla, as I tell, based on Jeffrey Moore's nomenclature. In the CPU market, still the leader, and investing heavily in the foundry, in chip manufacturing. Sooner or later, Intel has to or will enter into the GPU market. So there are a lot of positives there. It may be a turnaround story. It may be a value buy at $33 right now. In fact, 27, 28 is the price where the price to book ratio is 1. And even from the market cap to revenue perspective, it looks quite cheap as compared to AMD and, of course, NVIDIA. So that's one side of the story. The other side of the story is that, guys, CPU is continuously getting decimated and transformed into GPU demand. So this story is pretty much like a BlackBerry. BlackBerry used to be a market leader in the mobile phones, right? Till iPhone came. or you still think that you should be staying with a leader of NVIDIA who is driving and commanding the majority of the GPU market segment? Well, let me know your comments in the comment section. And if you like this kind of videos and analysis, don't forget to share and subscribe. Having said that, these are not the recommendations. Please consult your financial advisor for any investment decisions. Synanomics' aim is to create financial awareness so that you can act on it, analyze your own companies, and make money. With that, it's a goodbye from your friend Pankaj Sinha. Bye-bye.